Hey guys, it's Jojo here, and in today's video, I'm going to be talking about candlesticks. Candlesticks. So, I think candlesticks is one of the topic we needed to treat and at least get to know how it is formed, and so on and so forth. So, first off, if you just maybe downloaded your trading view, because that's what we use in analyzing the market, and for some persons your candlestick color will be green and red. The green signifies the bullish while red signifies bearish. So green and red, let's say something like this, this is your bullish, and we have your bearish as this. So this is your candlestick if you're just opening, but you can decide to customize yours later on, to any color you feel more comfortable with. But this is the main color. If you don't like, you just open the trading view. Green for buys, bullish, while red for sells, bearish. So now a candlestick has two parts. This is the structure of a candlestick. Now it has two parts. We have the wick and the shadow, and we have the body. So wick is like this, something like this. The wick, have the wick, and we have the wick as this, and we have the body. This is the body, this is the wick. The body and the wick. So now, first of all, we're going to start with what is a bullish candle. What is a bullish candle? This is a bullish candle. So what is a bullish candle? Is any candle that has its close above its open. So now what they're trying to tell us is that a bullish candle open from here, this particular place, then sellers comes into the market and push price down, then buyers comes in and push it back up. So now that's how the wick was formed. Then buyers became in control of the market and pushed it up to this highest point, to this particular point. This is the highest point. Then sellers pushed it back down before it closed here. So now a bullish candle has its close above, this is the above its open, this is the open. That's what a bullish candle is. While a bearish candle is the opposite. A bearish candle has its close below its open. A bearish candle, let me draw it with a wick. Bearish candle. So now the bearish candle now opens from here. It opens from here. Then buyers comes in, push price off. Then sellers comes in the market, push it to this point. Then buyers push it back up. Then it closes here. So it has its close below its open. The open is up while the close is down. Why bullish, the open is down, the close is up. That's that about that. Then what is a wick? A wick is like an equality between buyers and sellers. That's what a wick is. So when it sells to this level, then buyers push it out, it closes here, it cancels out. That's what gives it a wick. Buyers and sellers, equality between buyers and sellers. So I don't know if you've heard of this OHLC thing. That's what a candlestick, how a candlestick forms: open, high, low, close. So that's just it. Then we have what's the candlestick pattern? A candlestick pattern are formations that predicts or tells you what the market is going to do next. A candlestick patterns are candlestick formations that predict or tells you what the market is going to do next. So now we have different candlestick patterns, but the major ones that I use is the bullish engulfing, bearish engulfing. We have the engulfing candle, we have the engulfing bar, the pin bar, the spinning top. Those are the major ones. I think the spinning top, doji, hammer. We have a hammer and the inverse hammer. There are a lot of them. The tweezers, there are a lot. So I'm going to be giving you guys different illustrations about them. So yeah, we have, first of all, I'll start with the engulfing candle. Let's say we have, let's say we have something like this. This one will be for a bullish engulfing. For a bullish engulfing, the normal definition of this is a bullish engulfing candle. These are candlestick patterns. Candlestick patterns. So this is a bullish engulfing candle. Why is it called a bullish engulfing? Because this particular bullish candle engulfed the previous bearish one candle. These are our typical order blocks that we know. And you mark it like this. So that's why it's called a bullish engulfing candle. It engulfed the previous candle, bullish engulfing. Then we have the bearish engulfing candle. So this is the bearish engulfing. Why is it called the bearish engulfing? Because the bearish candle engulfed this bullish candle. This one is for a sell, while this one is for a buy. You understand? So then we have aside from the engulfing bar, we have our pin bar. Pin bar looks like this. Then we have something like this that goes down. So this is let me change the color. So this is a bullish pin bar. This is a bullish pin bar. Why we have another this thing like this? And this is a bearish pin bar. So these are pin bar, or you can call it hammer. Pin bar or hammer. So this is what it is. So then we have our spinning top. We have a spinning top, something like this. Spinning top. This is a spinning top candle. This is spinning of this for bearish. Then we have the bullish spinning top also. You can take note of all this: spinning top, bullish. So this is our spinning top. Why this is a hammer or pin bar? and these are engulfing bar. So these are like candlestick patterns, the major ones we use. So our spinning top, the spinning top is like an indecision candle, but it gives you a direction. Like it tells you what to do next. You understand? So like for a bullish spinning top, it indicates that price is going to go up. This bullish spinning top now, it indicates that price is going to go up. For a bearish spinning top, it indicates that price is going to go down. So that's that. But there's some, there's this one they call doji, that is purely an indecision candle. It doesn't, you don't even know where the price is going. This is a pure definition of an indecision candle, like a doji candle, pure definition of an indecision candle. So that's that. And I think but we have different type of then we have our tweezer. Yeah, a tweezer candle. The tweezer is something like this. Let's say we have a long, let me change this to bearish candle. Then you see something like on the same line, or something like this. It will be bullish. Then our line, tweezer candle. What we're trying to say is that in the tweezer candle now, your entry will be, around somewhere, like, because they're on the same line. So that's where your entry will be. If you want to take a trade, you can just, place your long here, then target the next churn of liquidity. So that's that about a tweezer. So we have types of candlesticks. We have a bullish candlestick and bearish, which we already talked about. Then aside from that, we have a bullish, like for the engulfing bar, we have different types of. This is the engulfing bar here. It's not just like this. Our engulfing bar is also our typical order block. We know this one, a typical order block. So, but aside from, we also have a bullish. The bullish is like, you see something like this. This one is also bullish. I mean, for this bearish. This is a bullish. I mean, this other candle is also bullish. This is also an order block, a bullish. And we have our bearish. We have bearish, which is this particular one. We have bearish, bullish. So they are like four. It's either they are the same color, or they are like the opposite color. This one will be your green, this one will be your red, this one will be your red, this one will be your green, or they are the same color. So those are like our typical order blocks we trade. I know there's a definition about order block as the last bearish candle before a bullish momentum. It's a very good deal. Like that's actually it. But if you stick to only that definition, you are going to miss out on a lot of opportunities in the market, because you think it must be the last bearish candle before a bullish momentum. So if you stick to just that definition, you're going to miss out on a lot, and like a lot of opportunities. So yeah, I think that's that about candlesticks. And yeah, I'm going to show you an example in the chart, so you guys would see more like an example of what I mean. And there's also one called the morning star. So the morning star is like something like this. We have red candle, then the next candle is something like this, and this one that goes off bullish. Sometimes it can be like this. So In our weeks, this is our morning star. So you're placing your entry, it will be from this region. So it will be from this region. You're placing your entry. It will be like this. This is a morning star order block. But it's not only just this. There is also another pattern to draw it. There's also one like this. Bearish. Second candle. And third one. Then it can be 3 candles, pushing it. The main thing is that it engulfs, and that's the most important. But it's also, before you wait for that, but this is the morning star, the second type that you can use. Second kind of morning star that we all know, Then your entry will be from, but this one your entry will be from here. I'm going to show you example on the chart, but I think this other one is the one that comes more often. They both come often actually, sure. So this is your bullish candle. So your entry will be like this from this place. From this place, I don't like this color. So that's how your entry will be. So these are the formation, the candlesticks formations. So I think I saw an engulfing bar that played out. Where was it? The Euro USD. Okay. I think there's one here now. Okay, so Euro USD. Euro USD, you're going to see the particular order block. So now, this particular one now you're seeing here, this one, you see that I marked. As you can see, this is an engulfing bar. After the last bearish candle, it got engulfed. So typically you mark from here. Here's an engulfing bar. And what happened when price came in, it triggered and went off. This is an engulfing bar. So I'm going to show you a morning star. This is a morning star here. It happened here. After this candle, you see this one got engulfed. Are you seeing? So I'm expecting this morning star self to even, okay, see as price came, might have triggered it. So I'm going to look for a more better one. There's one. This is a morning star. As you can see, and when price came in, it held it for a while. Although there was a roadblock up here, so it prevented price from going further. So, but this was a morning star. So you can see that the formations that occurs in the market. This one also is a morning star. This is a morning star. As you can see, price came in and engulfed. Why is it a morning star? Because it engulfed the candle. I showed you how to mark it. So engulf it completely. So this is a morning star. Then a tweezer. I think there's one tweezer that I caught. around here. I don't know if it's on this pair. Okay, yeah, this is a tweezer. No. What time frame was that? No, it's not on this currency pair. I think that's on GBP USD. I can't remember. I know that. See here. Can't actually remember the particular place I saw that teaser. Okay, I think it's here. Yeah, this is the place I saw the teaser. So this is a teaser bottom. I think I posted it on my YouTube also, how I caught the trade. So this is a tweezer bottom. After this one, it got swept the particular candle. And what happened? Place your entry from here, this particular range, like this, and your stop loss. So a tweezer is also called a rejection block actually. Stop loss will be below here, and it's held price. This was a 1:6 hour. I posted it on my YouTube video. You can go and check it out. So a tweezer is also called a rejection block, because if you go down to a lower time frame, you spot an order block on the 15-minute. So that's why it is called a rejection. You see it. You see the order block there. If you go down to the M15, yeah, look at it. Look at the order block here. So that's that about candlesticks, patterns, and all. So yeah, so in our next video we're going to talk about market structure, then explain more. I'm going to explain. I dropped some few videos on point of interest and how to enter them. So do well to subscribe and turn on post notification for more videos. Yeah.